Okay, hello everyone. In today's demo class, I'll be looking at a paper 2 section A questions. So as you can probably skim through, the question itself is not really difficult. However, today I would like to give some general tips for business management test, especially on paper 2 section A. So the common mistake a student makes is they choose a question just by looking at the baby questions. They don't really look at the case itself. However, that's really not good because once you choose a question based on the baby questions, then you start solving the question, then you read the case, then you find the terms that you've never learned before or some confusing terms. Then you have to switch a question and that takes a lot of time. So my tip is at least skim briefly the case itself, then look at the baby questions, then choose one of the two. So assuming that you've already skimmed through the case, let's jump right into question A. Describe one disadvantage for GD of leasing. Okay, what's the disadvantage of leasing? The company needs to make a constant payment throughout the time of their contract and the ownership remains unknown at the end of the contract. It depends on the contract. So you just have to put in GD term. So for GD, the disadvantage would be a constant payment throughout their contract and GD would not own the machine at the end of the contract. Although it is based on the contract, you can answer it just like that. That's 2 points, an easy point. Now, the next question, B, calculate the value of new machinery at 31st of December 2017 using the straight line depreciation method. Okay, so how do you find the straight line depreciation method? We first need to find the annual depreciation rate, which is found by original cost minus residual value over the lifespan, which in this case would be 50K minus 8K divided by 4 years. It's going to give you 10,500. But we know that the end date of this calculation is December 2017 and the purchase date is 1st of January 2016. That's full 2 years. That's full 2 years. So what you have to do is just multiply it by 2. Then you get the value of 21K. So this is the depreciation allowance. So now you just have to subtract this from the original cost to find the net present value at the end of 31st December 2017, which is 29K. Easy 2 points. Now, question C, same until the 31st of December 2017, but now using the reducing or declining balance method, applying the industry depreciation rate of 40%. Okay, so what's the biggest difference between the reducing balance method and the straight line balance method? The biggest difference is that reducing balance method, you find an accumulated depreciation allowance. So what are you talking about when you're talking about an accumulated? Okay, first you just have to make a table. As easy as that. Okay, DA, which is depreciation allowance. Then we have to Then we have the depreciation value of, net present value column. Then here, when did we purchase the machine? 1st of January 2016. I'll just put it as start of 2016. And the depreciation allowance would be 0 because the machine has not been depreciated yet. The net present value would still remain as same as the original cost, which is 50K. So, the end of 2016, let's say the machine, end of 2016, let's say the machine has been used for the whole year. Using the industry depreciation rate of 40%, you just multiply by the net present value of the previous year, which is 50K. You get 20K. So the net present value is the subtraction of 20K from the 50K, which will be 30K. Same goes for the end of 2017. is gonna be 18K, and the net present value at the end will be 12K. Now that's your answer. Make this table, then you get 4 points. Now, the last question. Explain one advantage for GD of using the straight line balance method. So what's the tricky part? The tricky part is, although it's asking for one advantage of straight line balance method, you have to make sure the advantage is better over, so let's compare to the reducing balance method. What's the benefit using the straight line over reducing balance method? One, an easy answer. It's much easier because GD is an engineering company, not an accounting company. They might choose a simpler method to find the depreciation rate of their machine. However, a better answer would be such as this. As we've compared from question B and C, for example, at the end of 2016, the appreciation allowance was, in the first straight line method, it was 10,500, but in the reducing balance, it was around 20K. So that's much higher. So in a profit and loss account, straight line balance method will show as a constant and less expenses in their profit and loss account. Thus, higher profit will result in a higher profit. And what does higher profit do? Higher profit do attract investors. It attracts investors. So that would be the best case for GD. Now, today we looked at a simple question from paper 2, section A. The general tip I'd like to give you is that business management is not about solving these kind of past paper questions. It's mostly about knowing your content, reading your textbook more, knowing your content, and the ability to apply these knowledge in these certain cases. It's not about doing more past papers, it's more about reading.